For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Well, it was another rough week in the markets. The S&P 500 ended down about 1.6%. But of course, there is light at the end of the tunnel. This isn't the end of the world. We're going to talk about all of that in last week's news right now and everything coming up.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
As always, I have quick reminders for you. Our disclosure is in our email footer. You can copy trade our portfolios on autopilot by using the link in the newsletter at thesimpleside.substack.com. You can also find daily news updates through our daily newsletter, which is at thesimplesidedaily.substack.com. And you can go find all of our stock research reports by going to thesimpleside.news. I know that's a lot of different links to go to and check out, but you can find all of them in the newsletter. So go there, thesimpleside.substack.com, and you can find everything about us, where to go, what to do, what to find, and all of that good stuff. Now, before we start the newsletter off with our market wisdom quote, I want to quickly apologize because I haven't really been on top of updating the Google Sheet that a lot of you pay attention to and rely on for a lot of your data or information about the portfolios or trades or all that stuff. So I am going to be working on getting more in the weeds, I guess you could say, on updating all of that. I think one of the things that I would like to do is kind of shift all of that over to thesimpleside.news, which is where you can find our market indicator and all of our stock research as of right now. I'd like to shift the portfolio and all the tracking over there. And what would probably have to happen is I would probably have to give a passcode or something to all of the paying subscribers so that they could log in and check that out. So I'm deciding exactly how I want to handle that, but I think going forward, that is probably how I'm going to handle it. All right, so with all that said, thank you for your patience, and I will be back to updating that as soon as possible. All right, regardless, it is time for your market wisdom for this week. This week's quote is from Warren Buffett, and he says, "Mr. Market has an incurable emotional problem. He gets depressed when he can see nothing but trouble ahead for both the business and the world, and on these occasions, he will name a very low price since he's terrified that you will unload your interest on him." Of course, this is Warren Buffett referring to the fact that when people are afraid that the market is going to drop, they're willing to sell things low. And that's what we're seeing right now in the market. People are afraid that things are going down, and they're afraid that they're going to be losing money, and so they're selling out. This is a pretty straightforward one, so we're not going to talk about it too much in depth. But something we will talk about in depth is what happened this week. Again, S&P 500 down about 2%, Nasdaq down about 2%, or about 3%, Dow down about 2%. So across the board, stocks are struggling. The 10-year Treasury went down about 7 basis points to 4.07%. The VIX finished in the low 23s after spiking midweek. Gold hovered around that $4,000 mark. Oil drifted under 58 to 60, and Bitcoin fell around 8 to 9% down to the mid 80s. So a lot of movements, majority of them signaling weakness in the market, but a lot happening nonetheless. And of course, we saw weakness across the board. Even with NVDA coming out with solid numbers, it couldn't help strengthen things out. And the returns this week, of course, were brought to you by extreme fear. And again, there's a photo in the newsletter of the greed fear gauge. And so, of course, we're sitting at an 11 out of 100, which is an extreme fear territory. Now, my comments for this are basically that the AI euphoria phase that we've been experiencing for the past, year is slowing down. And of course, people are starting to get terrified. I mean, try to go watch the news right now without being scared about the bubble popping or hearing that everything's going down or seeing Michael Burry say that valuations are all over the place. He doesn't know what to do. And it can sound terrifying. But the reality is that it's all about perspective, right? The past few weeks have been rough. The SPY is down around 5%, but people seem to have forgotten that stocks and markets go down. If everything was up and to the right all the time, we would all be rich, and no one would need to pay to hear me talk about how you need to not worry when stocks go down. So anyway, don't worry about it. What I've attached in the newsletter is a photo of this year's run of the SPY. And what I have highlighted in that image is the period from February 19th through April 8th. And this is when I think Trump really started announcing the tariffs and really pounding the table, if you will, on tariffs coming and 100% on China and 200% there and 300% here. So anyway, from that period of time, February 19th to April 8th, the market went down 19%. 19%. February to April, 19%. From that time, the market has risen around 33%. And almost a just straight line up. No more than a day or two with the markets going negative. So this past week of us going negative for a few weeks in a row is obviously causing a bit of fear and struggle. But remember, drawdowns happen. It occurs. We lost 20% this year just because someone mentioned tariffs that were somewhat backed out on. So stay level-headed. Don't worry about it. Yes, portfolios are going to go down. Yes, stocks are going to go down. That's okay. That happens. It's normal. So anyway, that's just my comment to you on all of this stuff about the markets, the fear and the greed and all of that. Just relax a little bit. When the alarm bells need to be sounded, they will be sounded, but you're never going to be able to prepare for a drop. It's not going to happen over a few months or a few weeks. It will happen quite quickly if the market does pop, quote unquote. If the bubble pops, it will be fast. It will not be slow. It will not take weeks for it to happen. It will be quick. All that being said, NVIDIA did sit at the center of everything this week. The company did clear a very high bar. Q3 revenue about $57 billion, with data centers north of $50 billion, and Q4 was guided towards $65 billion. And still, that could not carry the market for long as traders faded the initial pop of the stock and leaned into the quote-unquote sell the news narrative. Again, remember, the news is there to sell you on fear and greed, so you can't base your investing decisions off what you read. You need to go and just look at the facts and take emotion out of the game. Around that, capital kept flooding into AI infrastructure and models. Google launched Gemini 3 across all of its products. Brookfield outlined a $100 billion AI assets deal. Anthropic inked fresh multi-billion-dollar compute commitments with big tech and chip partners. Saudi link groups announced large data center plans. And Jeff Bezos, of course, surfaced with a new industrial AI venture. So, of course, AI is still the rage, even though AI is being sold off. People seem to think that it's still very, very valuable. And so they're still willing to build in the area. However, there is still risk. Sundar warned about the elements of irrationality. And the market is still trading that way. And what he's speaking of when he talks about the elements of irrationality, he's talking about the elements of irrationality in trading, the elements of irrationality in the AI build out, the AI capex, the AI spend, and just kind of all things AI deals, the multi-billion-dollar compute deals, the I'll invest in you, you buy from me, and all that stuff. So anyway. My opinion here is just let the market fall. I mean, we are overvalued. There's no one should be surprised that the market is going down right now or worried. I've got two good things. First thing is the simple signal, which is a market signal that I'm currently developing for all of my subscribers. So you can go check that out. That you can find at thesimpleside.news, or you can click the link that's in the newsletter. It's called the Simple Signal. And so you can go check that out there. But if you scroll down below the Simple Signal, if you go to the website, or if you just scroll down in the newsletter, you'll come across something called the Buffett Indicator. And it's just the ratio of the Wilshire 5000 over gross net profit. So basically what you want to see is, what I like to see is a great time to buy is when that's 113 to 138%. So basically the value of stocks to the gross national product is about the same size, 13% higher, 38% higher, in that range. Where we are now is 214% higher, and that means we are significantly overvalued. The market's significantly overvalued. If everything that I just said made no sense to you, just know the market is significantly overvalued right now, and this is just a way to show it and put a percent to it. So the market should drop. We want it to drop. There's a reason why, and all the paying subscribers know this, and I'll give it to you free subscribers for free. I am 50% in cash right now. 50% of my portfolio is sitting in cash because I know the market's too overvalued. Now, I think there are high quality companies that you can still go buy, but high quality companies are still going to go down in price when the entire market starts to find its way down the rabbit hole. And so I'm I guess, weighted appropriately for that. All right, enough of me rambling. Let's get back into the news. Macro and policy, we're kind of polling in opposite directions this week. October CPI and jobs were still disrupted, but investors were kind of forced to handicap the December Fed meeting off partial and delayed inputs as well. So hard to make decisions when you don't know what exactly it is that the future holds for you, if you will. The meeting notes, aka the Fed minutes, showed a wider FOMC split, but a late week rate cut nudge from the New York Fed, John Williams, kind of steadied the risk. So a bit more leaning towards a rate cut in December, but still kind of opposite sides of the spectrum across the board. This did send the 10-year a bit lower, but nothing major. Elsewhere, Japan just approved a 2.13 trillion yen, I think is what their currency is, stimulus, or yuan, or whatever it is that they use. But basically, they're leaning into defense quite a bit. Of course, this add duration questions, but life goes on. That being said, stimulus we know means inflation, and Japan has been struggling with inflation, so this is a very interesting move, I guess, to make. On the U.S. industrial side, of course, we're seeing more and more about rare earth onshoring. Headlines, of course, are resurfacing as policymakers are trying to cut out China's exposure in the magnets and materials side of things. This is something I'm actually really happy to see. I think as mineral stocks start to trade lower, it'll allow us to make maybe value buys in our AI secondhand effects portfolio, which will eventually in the future get bolstered as we continue to cut out China's exposure in the U.S. markets for these industries. Walmart, of course, beat and raised on 28% e-commerce growth, which is just ridiculous when you think about the size of Walmart. The fact that they're growing their e-commerce 28% is just wildly, wildly impressive. In the same vein, Target cut guidance and Home Depot missed as big ticket projects cooled. Again, no surprise there. Things are getting very expensive. Homes are getting very expensive. People are saving a bit more of their money, or they're just cost constrained in other areas. So they're just not spending as much on their homes, which should come as no surprise. Lowe's, however, did outperform, most of that coming from cost control and less from growing revenues by insane amounts, but regardless. Nothing else major in this world. However, the sentiment gauge slid towards the low 50s. This, of course, being consumer sentiment. So holiday spending might be a little bit interesting. We're also starting to see household utility delinquencies start to rise, which is quite the scary thing to hear about and see, because when you can't pay your water bill, your electricity bill, things start to get really, really bad. That's scary when people can't make those type of payments. With all that being said, though, I do want to remind you that markets are irrational. They're there to serve you. Do not let them control you. Again, see the market wisdom quote above. They're there to serve you, not to control you. Don't let them control you. Walmart, for example, just had an absolutely stellar quarter. And I guarantee you that if the market continues going down, we'll see Walmart stock end up lower than what it was before their earnings came out, even though their business is performing better than it was 3 months ago. So tell me if you think that's rational. And the answer is no. But that's how you make money in this market. You wait and you wait and you wait, and then you see an incredible opportunity and you make a move. Walmart comes out with incredible earnings. The general market's trending down. People sell Walmart because they're afraid. Oh, look, Walmart's a great opportunity because they're making more money than they were before. and they're growing at an incredible clip, but people are selling off because they're worried that whatever, ChatGPT is spending too much money and they're making too many blah, blah, blah deals. It doesn't make any sense. It doesn't make any sense. On the other side of things, Meta just won a major antitrust case that involves the breakup with them controlling both Instagram and WhatsApp. So they're all set there. They should be rising incredibly because when you're free from antitrust, it means you can do a lot of things and make a lot of money when you're a big company like that. However, I think their stock was down quite a bit this week. So, again, market irrationality. Cloudflare, of course, resolved a broad outage tied to a configuration error. And again, this is a reminder of how concentrated critical web plumbing has become. And I'll say this again and again and again. Markets are irrational, and this is just another incredible example. Cloudflare, to me, is shaping up to be one of those back up the truck type opportunities. CrowdStrike, we saw earlier this year, I think in July, they had an outage. And I've got a quote in the newsletter for you to go through and read, but basically, they had an outage that locked hardware for Microsoft's operating systems or something like that, so people couldn't use their computers. The stock dropped something like 20%, and we bought it when it bottomed out. We bought it down at the bottom, and we sold that company for something like a 50% gain, I believe. I'd have to go double check, but just because a company has an outage doesn't mean that their entire business model is kaput. But that's how people treated that. And the same thing's happening right now with Cloudflare. The stock is down about 26% from its high this year. And so they're just creating these, it's just free money at that point. Of course, the market's still going down, and maybe there's other things, and insiders might know more about what's happening with the company than we do. But regardless, that's shaping up to be a buying opportunity for Cloudflare. The ticker there is NET. A few other big things happened in the crypto world. There's a lot of falling knives happening right now. And of course, we're seeing MicroStrategy just get crushed because of their Bitcoin strategy, which I think needs Bitcoin to go past $130,000 for them maybe to be break even. Don't quote me on that, but I think they need to be past 130K on a Bitcoin price to break even. I think they get margin called at 60,000, maybe 70,000. I can't remember exactly. I should have looked that up before we did the podcast. But regardless, just hilarious things to watch there. This guy's betting on an asset that maybe is very valuable in some way, shape, or form, but creates no money. So sure, it's an asset, but if it doesn't make you any money, is it really an asset? Sounds more like a liability to me. Regardless, the world is going to keep on spinning. For our stock research, again, you can find our stock research at thesimpleside.news. So you Google that, you'll find us there. These are just articles that we send out about stocks that we think have the potential to make outsized returns over some period of time. Typically, these are between 9 to 12 months. This week, we only wrote one. So go and check that out. There's a link to it in the newsletter. I'm not even going to tell you about what this one is. You got to go check it out. It is our 5th research article that we've posted. And the company right now is making almost 100% returns on invested capital. So very, very, very incredible business. As always, if you're a paying subscriber, you can go rip through the rest of the newsletter. You've got our portfolio returns, our holdings, any updates, and our weekly picks, which are performing incredibly well. They're up 79% over the 70 weeks that we've been doing them. So we've been doing about 1% a week. Annualized returns for this are about 58.79%. So anyway, go and check all that out if you're a paid subscriber. If you're not paid, you need to join paid. Go see all of our portfolios, everything we're invested in, get all of our stock research, get our weekly picks, and a bunch of other things that we're building out for all of our subscribers right now. And I will see you all next weekend.